The other thing about expectations of people who are allocating to alternative segments of the market and also who are looking at private equity, I think a lot of institutional investors have accumulated significant portfolios and have allocated quite a bit to alternatives. So for them, the main dilemma is to basically decide which relations do they keep, which relations do they prioritize, because a lot of these funds are fundraising now, right? So for institutionals, it's a big dilemma: which funds do they re-up, which funds do they support, and then what are the basis for adding new relationships? And in such environment, I think what becomes very important, and that's where we at Flashpoint are very focused on, is differentiation. How do we differentiate from other fund managers who are basically looking to raise capital in the current environment where capital is super scarce? And how do you persuade the institutional investor that you are differentiated? For us, I think our main area of differentiation lies around our sort of cross-border strategy of supporting Eastern European founders and Israeli founders working in the US. So that's number one. Number two is we're very specialized on B2B vertical software. Today, it's mostly AI software in large B2B verticals. And number three, I think we're very differentiated because we are we're a venture growth strategy. So we sit between venture capital and growth equity. And in that sense, we're catching the best of both. So we get basically an earlier entry versus growth, but we also are less risky versus pure VC strategy, where people have lower hit ratios and higher loss ratios, and the allocation is more steered towards early stage. Our allocation in terms of the fund is more steered towards companies that have already grown into $5, $7, $10 million sort of revenue mark. That's where we would deploy most of our capital once we're inside the company, of course.